Imela, let us quickly do grade 9 revision accounting. But before I can even get started, I will revise important concepts. The first concept is the concept will be credit sales. What is credit sales? Credit sales refers to us selling goods on credit. When we sell goods on credit, please note that 4 accounts will be affected. And these are the 4 accounts that will be affected. We debit debtors control at selling price. Debtors control is an asset. The fact that someone or a customer bought goods from us on credit, it means that that customer will be owing us more. And when the customer owes us more, an asset will increase, and it will increase on the debit side. Hence, for this account, your debtors control will increase on the debit side whenever we sell goods. Got it? Great. But when a debtor buys goods, we are earning income, and that income is sales. That's why we debit debtors control, we credit sales. Sales is income, debtors control is an asset. Asset increase on the debit side and sales increase on the credit side. So whenever we sell goods on credit, you debit debtors control and you credit sales. These accounts will be recorded at selling price. The other 2 accounts that will be affected will be cost of sales and trading stock. Cost of sales is an expense. It increases on the debit side whenever we sell goods. I repeat, cost of sales increases on the debit side whenever we sell goods. Trading stock will decrease on the credit side because we are losing stock. It's being sold, it's gone. So these 2 accounts will be recorded at cost price. Cost of sales will be an expense. It increases on the debit side. Trading stock is decreasing. An asset decreases on the credit side. That is why we're crediting trading stock here at cost price. Okay. This is us when we sell goods on credit. What happens though when the customer returns those goods? When the customer returns the goods, we need to apply everything we have done in reverse. We need to debit sales and credit debtors control. But accounting doesn't allow us to debit sales. So instead of debiting sales, we'll create another account, as I have said, which we call our debtors allowances. Debtors allowances is similar to an expense. So we debit debtors allowances at selling price and we credit debtors control, because when a debtor returns goods to us, they will owe us less. And remember what I've said, the debtor will always owe us the selling price of goods we sold to them. That is why here, when they owe us less, they will owe us less of the selling price of goods we sold to them. Debtors allowances is debited because it's an expense. As I've said, it's a reduction of sales. Debtors control is just an asset going down because the debtor has returned goods, and as a result, they will owe us less. Remember the other 2 accounts, we normally debit cost of sales when we sell, we credit trading stock. The reverse applies when the debtor returns goods. We will debit trading stock and then credit cost of sales. You got it? That was just an intro. Let's try this one out. So we've got Veristar's suppliers, which uses 25% markup on cost. Let me highlight that. I might need it. All right. Now, we are required to analyze the transactions of various stars suppliers that occurred in July 2023 according to the answer book provided. The first transaction has been done for you as an example. Assume that bank has a favorable balance at all times. So it'll always have a positive balance. That's what they mean by that. And the transactions, the example says that the owner contributed 280,000 cash to the business. How do we record that? It has already been recorded. We normally debit bank because it's an asset, and we credit capital. Capital is what it has been contributed by the owner. Please note that capital increases owner's equity and bank will increase your asset. That's why we've got plus under assets and plus under owner's equity by 280,000, and under liabilities we've got 0 because your liabilities are not affected in this case. Please note that I just need to bring this to your attention. Your owner's equity will be increased. Let me start by the decrease. The owner's equity will be decreased. Decrease means it's a minus, right? It will be decreased by 2 things. It will be decreased by drawings and expenses. And it'll be increased by 2 things. It'll be increased by capital and income. You got it. Whatever decreases owner's equity, you debit it. And whatever increases owner's equity, you credit it. You got that. So income increases owner's equity on the credit side, and drawings and expenses will decrease owner's equity on the debit side. You sure you got that? When we abbreviate this, we say it's side. Okay, C for income, C for capital, I for income. Those increase owner's equity on the credit side. And we've got D for drawings and E for expenses. They reduce owner's equity on the debit side. Please do not forget this. In case you're struggling to understand this, please go under podcast or playlist, look for analysis of transactions. And that's where I went through this thoroughly and I explained it thoroughly. So everything that I will be going through today, if you don't understand it, like for instance, I'll be going through the general ledger later on. You need to go to podcast, go under the general ledger. That's where I explained everything thoroughly. Okay. If we are doing journals, you will have to go under journals, and in the podcast, go under journals. That's why I explained everything thoroughly as well. Okay. Now, let's go to the first transaction. What does it say? It says that various stars suppliers bought consumables on credit. So what did we buy here? We bought consumables. Consumables are an expense. So this is one account that is affected. The other account that is affected is on credit. On credit means your liability is going up, which is your creditor's control. So when you buy any item on credit, please know that creditor's control will be affected. And when you buy on credit, your creditor's control will increase on the credit side. Okay? We good? Consumables are an expense. So when you buy an expense, it will increase on the debit side. For this transaction, I am going to debit consumable stores and credit creditor's control. Assets are not affected here. So under assets, I'll have 0. Under owner's equity, I will have minus 12,000 because we bought them for 12,000 Rand. Consumables are an expense. Remember what I said earlier on? Owner's equity is affected by 4 accounts, and one of them is an expense. When expenses go up, they reduce owner's equity. So 2 things that reduce owner's equity, I said, is drawings and expenses, okay? That's why here you debited consumables because it's an expense. When expenses go up, they increase on the credit side, and then you credited creditors control. That is because you are owing a person, you are owing someone more because you bought goods on credit from them. That will increase our liabilities. Liabilities, when they increase on their credit side. Got that? All right. So basically here, I'm going to have, under liabilities, I'm going to have plus 12,000 Rand because we are owing a person more. Why are we owing this person more? It's because we bought goods on credit from them. Got it, guys? Good. Let's go to transaction number 2. What does transaction number 2 say? It says we sold goods on credit to M Vise for 18,750. Whoa, this is credit sales. So for credit sales, what did I say? 4 accounts will be affected, which are these 4 accounts over here. We will debit debtors control at selling price, which is what I'm going to be doing. Debit debtors control at selling price. Then you credit sales at selling price. Debtors control, I did specify, is an asset, so it means we are going to be owed more. We sold these goods for 18,750, and sales is income, okay? So income falls under owner's equity. And that's why wow, look at where I wrote that. That's why your owner's equity will basically go up on the credit side. It will be increased by capital as well as income. It increases on the credit side by capital as well as income. Okay. So basically, our sales will increase our owner's equity by 18,750, and our liabilities will not be affected. But when you look at this equation here, I said 4 accounts will be affected. The other 2 accounts will be cost of sales as well as trading stock. But the thing with these 2 accounts, we only record them at cost price. So we need to find the cost price. So we were given the selling price as 18,750. I need to find what the markup was. What was the markup here? The markup is 25%. So if I want the cost price from that 18,750, I'm just going to multiply it by 100 and divide it by 125, which is 100 plus the markup. That's why I'm dividing it by 125. This will give me the cost price. How much is the cost price? It will be 18,750 multiplied by 100 and divide this by 125. It will give you 15,000. So the cost price is 15,000, meaning that you are going to debit cost of sales by 15,000 and then credit your trading stock by the same amount, which is 15,000. How do we record this? As I've said, you will debit cost of sales, which is an expense. Remember I said that. You will debit cost of sales and credit trading stock. These two, you record them at cost price, which is the 15,000 we just calculated. Trading stock will decrease your asset, and cost of sales is an expense. It decreases your owner's equity. Liabilities here will be 0. Liabilities represent the people that we owe. We good? Great. Let's go to the 10. Various stars suppliers received 11,600 from M. Visser, a debtor. So M. Visser paid us 11,600. Interesting. Now, since M. Visser paid us, it means that our bank account will increase. And when our bank account increases, it will increase on the debit side. We will basically just debit bank. M. Visser was a debtor. And when a debtor pays us, it'll decrease our debtor's control, what that debtor is owing us. So I'm going to decrease my debtor's control by 11,600, which is what M. Visser paid. Both of these accounts are assets. Bank is going up, it's an asset. It'll go up on the debit side. Debtor's control is going down, it's an asset. It goes down on the credit side. So under assets, I will have plus or minus. And owner's equity will be 0, and liabilities will be 0. We good? Let's move on. Number 20 says various stars suppliers, while suppliers purchase goods on credit from Beyonce traders for 19,000 and received 10.5% trade discount. You will take the 19,000. Because we were given a trade discount, you can't record it as 19,000. You will record it at 100% minus the trade discount, which is 10.5%. How much will this give us? $19,000 multiplied by 100, shift, percentage, minus 10.5, shift, percentage, close brackets. It'll give us 17,005. So we bought goods from Yangtze Beehive. Since we bought goods from Yangtze, we are going to owe Yangtze more. But we bought goods, that means our trading stock will go up. Please note that trade discount will not be recorded at all. We will basically just debit our trading stock and credit creditors control, which is Yangtze traders. Our trading stock increases our asset, and no owner's equity account is affected. So under owner's equity, we'll have 0. And we are going to owe Yangtze more. So that's why under liabilities, we'll have plus 17,005. That's it. Let's go to the 24th. M. Visser, a debtor, returned goods worth 13,125. Interesting. So we don't know what the relationship is between us and MVISA, because when you take 18,750 and then you minus what we received on the 10th, you'll realize that MVISA returned goods that are more than what he already owes us, but we don't know what was happening at the beginning, so we'll just record it as it is. We don't know how much MVISA was owing us from last year or last month. So what we're going to do is to record that 13,125. Now, it says MVISA data returned goods worth the 13,125. So that 13,125 is the selling price of the goods that were returned. And how many accounts are affected when goods are returned? There's the 4 accounts. So we know that debtors allowances and debtors control will be recorded at that 13,125 because that is the selling price. These two are recorded at selling price. So we will debit sales by 13,000. We will debit debtors allowances. Wow, you see what I did there? You will debit debtors allowances by the selling price, and then you will credit debtors control by the selling price. Debtors allowances, debtors control is an asset, it will reduce your assets, and debtors allowances is an expense, it will reduce your owner's equity, and your liabilities will be 0. The other 2 accounts that will be affected, we are going to debit trading stock and credit cost of sales, but at cost price. So we need to take this 13,120 multiply it by 100 and divide it by 125 because we were given the markup. How much will this give us? $13,125 multiplied by 100 divided by 125. It'll give us 10,500. We will basically debit trading stock because we are getting more stock. Why are we getting more stock? Because the debtor returned goods. We will basically debit trading stock by 10,500 and credit cost of sales by 10,500. Trading stock is an asset. It means that our asset will go up by 10,500. And cost of sales it's a reduction of your expense because normally your expense goes up on the debit side. So remember, when an expense goes up, look at this one here. When an expense goes up, here, it'll be debited. Expense goes up. What happens to owner's equity? It decreases. Here, our expense is going down. So what will happen to owner's equity? It'll increase. A reduction of an expense increases owner's equity. And under liabilities, we'll have 0. Done. Let's move to the next one. It says that the owner took stationery worth 4,900. So if the owner takes anything from the business, we debit drawings and we credit whatever the owner took from the business. Both of these fall under owner's equity. Assets are not affected. Drawings will reduce owner's equity. All right, when it goes up, it will reduce owner's equity. But at the same time, because the owner took stationery, your expense is going down. So a reduction of an expense increases owner's equity. That is why under owner's equity, we will have plus minus, which is 4,900. And then we'll have 0 under owner's equity. Then you can just add everything up. Net worth is always equal to owner's equity, which will be that 269,125. Alrighty, guys. That is question 1, and it is out of 32. All right. Now, I want you to take a look at this. So this is very nice limited. It purchases goods on credit from Volvi Questa wholesalers. So we've got transactions for March 2023. And it says that we were owing Volvi wholesalers 5,678. We bought stock on credit from Volvi Questa wholesalers for 2,000. We returned some of the goods, some of the stock which was bought from Volvi Questa wholesalers on the 4th. We sent a debit note for 200. On the 19th, we paid 7,000 by EFT to Volvi Questa wholesalers in settlement of account. On the 25th, Volvi Questa wholesalers approved a discount of 478 for a payment made on the 19th of March. Now they want us to prepare the creditors ledger of Volvi wholesalers in the books of Very Nice Limited. You need to understand that we are Very Nice Limited. We buy goods on credit from Volvi wholesalers, meaning that Volvi wholesalers, Questa wholesalers, is a creditor to us, and we are asked to prepare the creditors ledger. I think this one is easier than when I combine everything and then you have to prepare the journal and then prepare the ledger. This one is quite straightforward. So how do we prepare this one here? I made it easy for you here. Interesting. So I will start with the balance that we are owing for Volvi wholesalers, which is 5,678. What happened on the 4th? It says on the 4th, we bought stock on credit from Volvi Questa wholesalers for 2,000. When we buy goods on credit, please note that in the creditors, because this is the creditors ledger, debit means minus and credit means plus. Since we bought goods from Volvi wholesalers, and the details you'll put in invoice number. Obviously, here I didn't give you invoice numbers. Did I give you invoice numbers? I don't think I did. No, I did not give you invoice numbers. So you will just come up with your own invoice number as long as you wrote invoice anything. So I wrote invoice 001. This information will come from the CJ. It will increase what we owe Volvi wholesalers. Why does it increase what we owe Volvi wholesalers? It is because we bought goods on credit. So our balance, the balance that we owe Volvi wholesalers has gone up from 5,678. You are going to add this 2,000 and the new balance will be 7,678. All right, let's go to the 9th. What happened on the 9th? It says that we returned some of the stock which was bought from Volvi wholesalers. So we returned, and when we returned those goods, we sent a debit note for 200. So because the debit note is the only source document we've got here, and details, you can write invoice or debit note, but because here you were given a debit note, you will write debit note number 001. It comes from the creditors allowances journal. It will be on the debit side because it reduces what we owe Volvi wholesalers. But why? Because we returned goods to Volvi wholesalers. So now we are going to owe Volvi wholesalers less because we returned goods worth 200. So now we'll be owing them 7,478, which was that 7,678 minus this 200. It'll give you that 7,478. Done. Let's move on to the next one on the 19th. What do they say on the 19th? It says that we paid 7,000 by EFT to provide wholesalers. In settlement of account, it means that we are paying everything that we owe Volvai wholesalers. How much are we owing Volvai wholesalers at the moment? We owe them 7,478, but we paid them. So because we paid them, under details, you always put the source document. It's either you put the bank statement or EFT. It's from the CPJ because we paid them. It'll reduce what we owe Volvai wholesalers on the debit side by 7,000 because that's what we paid. 7,478 minus 7,000, it'll give you 478. Okay, that's how much we owe Volvai wholesalers after paying them. But they said settle, so we were supposed to get 0. Let me just find out what happened. The 25th will tell us. It says that Volvai Questa wholesalers gave us a discount of 478 for a payment made on the 19th. I am going to write under details. I will just write discount received. I prefer to write discount received, even though here I wrote discount. It's from the CPJ. So they gave us a discount of 478. It means that since we paid them 7,000, the other amount that we still owing to them, they gave it to us as a discount. So we are going to reduce what we owe them by 478, which is the discount, which ends up giving us 0. So at the end, we end up owing Questa wholesalers 0. Okay, that's it. That's it, guys. All right, I have done question 1 and 2. I just want to leave you guys with question 4 before we go to question 3, because question 3 is about the journals. Question 4 is about the general ledger. I just want you to look at this and use all of that information to prepare this. And this. This. And that. I've put the signs for you already, so you should be able to do this because I've put the plus and the minuses for you. In the exam, please note that they will not be there. You'll have to remember all of this by yourself. All right? Well, that is it from me. I will continue with the revision videos. I guess I'll see you guys tomorrow. Don't wait for the day before the exam to watch these videos. Watch them now, right? For now, all I can say is, khutsong.